This is the chain holding problem of asked in exam July 2021. Given below are the balance sheet of group of companies comprising of LX, MX, and NX. Let's call it as LMN. PP given investment in MX, investment in NX. So L in M, L, M, N. The top-down approach chain holding. Inventories, financial assets, trade receivables, bill receivable, cash in hand at bank. Okay, it's alignment issue, I think. So inventory is correct. The trade receivable is this, bill receivable is this, cash in bank is this. So please adjust for that alignment issue. Share capital, other equity, reserves, retained earnings, current liabilities, financial liabilities, bills payable, payable to MX Limited. So it's a mutual owing, so we should subtract while we prepare the balance sheet. X Limited holds 85% in MX Limited. X Limited, I think LX Limited. LX Limited holds 85% in MX, which acquired on 1st of April. And MX Limited holds 60% shares in NX Limited, which were acquired on 30th of September, middle of the year. The following balances stood in the books of MX Limited and NX Limited on 1st of April. Reserves, retained earnings. The business activities of MX is not seasonal in nature. So basically you can divide on time proportion basis because the acquisition took place during the year. The parent company adopted the accounting policy to measure non-controlling interest at fair value, applying Indus 103. A fair value is determined to be at quoted market price. Given the market price of MX Limited is rupees 120 per share and NX Limited is 125 per share. Prepare consolidated balance sheet of group companies of LX, MX, and NX. Okay, so first thing we'll understand the shareholding pattern and then we'll go for the pre-post analysis, then our working note format, and then we prepare the balance sheet. Okay, first we'll go for the shareholding pattern. So LX Limited, or let's call it as L, 85% in M. So let's write L as 85% in M. And M Limited has 60% something, 60%, yeah, 60% in N. So when you analyze the intermediary company, M Limited, 85% is holding company share, 15% is non-controlling interest. But when you calculate L in M, that is, you see, if you have to calculate L in M, in that case, you are going to multiply, this is 60%, 85% of 60%. You understand the calculation? N 160 goes to M. Out of that, 85 goes to L. So what you should calculate? Group holding in N, when you're trying to calculate, you should do percentage of percentage. 85% of 60%. So what that percentage will come to, 85 into 60%, 85% of 60%, 51%. The 51% is what the holding company share, remaining 49 will be considered as NCI share. Okay, so this is one thing is required while doing our working note format. Other thing is pre-acquisition, post-acquisition profits. Let's analyze. The following balance stood on 1st of April. Reserves and retained earnings. Okay, let's talk about that analysis of profits. First, let me do for M Limited's profits. Then I'll go for N Limited. So M Limited profits, they have reserves. M Limited, look at M Limited's reserves. So this is what we need to focus on, these numbers. So reserves 810, retained earnings 600. Reserves 810, retained earnings 600. Okay, so what we are going to do with respect to the reserves here, 810, 600. Look at when L has acquired in M. On which date? L acquired on 1st of April. So opening balance, whatever you see, that becomes pre and remaining is post, 760, 480. Opening 760, which is pre, and current year, 760, and the other one is 480. So what will be the remaining amount? I think you get 50. Current year. Since acquisition took place on the first day of the year, no need to divide this further. 760, 50. So current year 600 minus 480, I think you get 120. Okay, so this is M Limited profits. Then let me do N Limited profits. So what is their reserves? N Limited profits, reserves and retained earnings 580, 310. 580, 310. So 580 is reserves, 310 is retained earnings. This also will divide this into opening and current year. Reserves opening 520 and retained earnings 150. So current year is 60. Okay, so current year is 60. Now this needs further division. Why? Because acquisition took place on which date? It is on 30th of September. So in the NX Limited, the shares were acquired on 30th of September. So this will be further divided into 6 months, 6 months. So up to the date of acquisition, up to 30th of September, 6 months. So 30, 30. After 30th of September, remaining half. So 30, 30. Same thing applicable here also. Current year 310 minus 150 is 160. We'll divide this as 80, 80. Up to 30th of September is 80. After 30th of September is also 80. 6 months, 6 months. Okay, so hope it is done. I'll go for our working note format. So pre-acquisition, post-acquisition, you can sum it up, or I'm going to calculate separately. That's also fine. I hope they have done till here. Any doubts? Shall we go for our regular working note formats? Okay, fine. Let's go further. Working note format. So I'll start with all the three companies here. One by one, I will do it. Format is same. Particulars, amount, in brackets, goodwill, on PL, NCI. Okay, so we'll start with the lowest one, that is last one, NX Limited. NX Limited, or let's say subsidiary, NX Limited. The percentage held by holding company, we calculated. How much is group share? Group share is percentage of percentage. 85% of 60%. We calculated 51%. So 51% is group share, 49% is NCI. We'll start with their share capital. Share capital of the last company. Look at the balance sheet. Share capital 1600. Divided 51%. So 816 is it? 816, nothing for ConPL, 49%, 784. Then general reserve, I mean, in the sense, retained earnings, Retained earnings is again we are calculated here. Okay, reserves and retained earnings. Reserves pre 520 plus 30. I'll say 550, and post is 30. So first I'll do reserves pre, post. Similarly, retained earnings pre, post. Okay, so reserves is 520 and 30, 550. Post is 30 then. Retained earnings 110 plus 80. Sorry, 150 and 80, that is 240. 240, no, 230. 230 and 80. 230 and 80. So pre-acquisition, you take it to goodwill column. So 550 into 51%, 280.5. To 69.5. Then 30 is post acquisition, so that come in con PL. That is 15.3 and 14.7. Pre-acquisition comes in goodwill calculation. 230 into 0.51, 117.3, and NCA column there share 230 into 0.49, 112.7. Post acquisition comes in con PL. 80 into 51%, 40.8. 80 into 49%, 39.2. Okay. Any adjustment like fair value adjustments, depreciation, unrealized profit, nothing is there. But one thing will come, that is NCI adjustments. You see NCI adjustment because they said NCI is to be valued on fair value basis, right? And the fair value is to be determined on market price. So non-controlling interest is on fair value basis. So we are going for fair valuation. For that, I should know the difference between the book value and fair value. Book value means what? I will take share capital, I will take reserves pre-acquisition and retained earning pre-acquisition. The net worth as on date of acquisition. NCI as on date of acquisition. Do not take 14.7, do not take 13.2. So what is that book value coming to? 784 plus 269.5 plus 112.7. 1166.2 is the book value. Then what is the fair value? Fair value, how to calculate? They said you do it based on quoted market price. So what is the quoted market price of NX Limited? NX Limited is 125 per share. And how much percentage? NCI percentage is 49%. How many shares are there in NX Limited? 1600, face value 100 per share. So take out 20, 16 lakhs shares. 16 lakh shares are there, but you are taking only 49%, and quoted price is 125. So that number comes to 16 lakh shares, 49%, 125 minus you get 980. Okay. So the difference between book value and fair value. Now please tell me, should I subtract this number or add this number? In the sense, fair value is 980 and my book value proportionate NCI is 116. So this numbers representing now 1166.2, but I want to make it 980. From 1166, I have to bring it down to 980. So what should I do in NCI? In NCI, we should subtract. In NCI, if I subtract, that value will come down. Ultimately, we come to fair value. And in goodwill, I'm going to do opposite. So I'm going to do plus. The difference, 116.2 minus 980, 186.2. It will be subtracted in NCI column and added in goodwill column. Okay, so this is what is with respect to NX Limited, one holding subsidiary company. The next is subsidiary company MX Limited. Amount, I mean percentage, is 85 by holding company. So 85%, 85%, and then 15%. We'll start with share capital. Their share capital is looking at this one. Share capital 2000. 85%. 1700, nothing con PL. I think 300 comes to NCI. Then reserves, pre, post, retained earnings, pre, post. So reserves here we calculated, okay, there's only pre and post, 760, 50. And here 480, 120. So 51%, sorry, 85%, 646. 114. Post will come in con PL. 50 into 85, that is 42.5 and 7.5. 480 into 85%, 408. And NCI, 480 into 15%, 72. 120, that is post will come in con PL. 120 into 85, 102, and this is 18. Okay, so what else will come? Just like there we had, here also we will have NCI adjustments. Book value is comprising of the NCI on the date of acquisition. 300 will take it, 114 will take it. No, share capital 300 will take. Yes, 114 will take. 7.5 will not take. 72 will take it. 18 will not take. So any pre-acquisition element, NCI on the date of acquisition. So 300 plus 114 plus 72, that is 486. And fair value of NX Limited is 120 per share. And how much shares we have? 2000. If I take the 100 per share face value, that is 20 lakh. 20 lakh multiplied by 15%. 20 lakh multiplied by 15%, and each value is 120 per share. So 20 into 15% into 120, that is 360. Again, fair value is less. So NCI adjustment difference, 486 minus 360, which is 126. It's a fair value is less, so I subtract an NCI. 126, and I will add in goodwill. Okay, that's one extra thing will come, which will not come in other consolidation problem, which will come only in uh, chain holding problems. Look at this investments. This investment 2620 will come under holding company, but this investment 1350 is under MX Limited. So I write this investment under MX Limited, and this also I distribute. This is one extra element that will come. So this investments by MX Limited in NX Limited. So I'm writing under MX Limited. Investment is 1350. This you also divide within brackets, 1350, divide between same percentage, 85% and 15%. 1350, 85%, 1147.5, and remaining 15%, 202.5. This is the one extra element will come, which will not come in other situations. In case of chain holding, the intermediary investment also to be distributed between holding company share and NCI share, extra line in case of chain holding. Yes, that's it. So now we can do the last one, which is LX Limited holding company. That is investment in MX. That entire amount in the goodwill column, investment 2620. In goodwill column, entire amount. Then their reserves and their retained earnings. No pre-post here, full amount. So reserves is 1150, retained earnings 1030. 1150, 1030. Entire amount goes to ConPL 1150, 1030. Okay, so do the total and tell me how much amount you get column wise. Okay, I'll do the total myself. 816, 280.5, 117.3, 186.2, 1700, 646, 408, 126, minus 1147.5, minus 2620. We get 512.5. 15.3, 40.8, 42.5, 102, 1150, 1030, 2380.6. And NCI all 784, 269.5, 14.7, 1112.7, 39.2, 186.2, plus 300, 114, 7.5, 72, 18, 126, minus 202.5, 1216.9. Okay, so this is about the working note formats. Hope you have done. See if you have any doubts. Now we have to go for the balance sheet. Okay, let's go for balance sheets. Consolidated balance sheets. Particulars, note number, amounts. Start from the asset side. Assets, non-current assets. To that PP. No adjustments. 1500, 1600, 1400. So 4500 amount rupees in lakhs. No intangible assets. Current assets. We have inventories. Please write the financial assets along in balance sheet. I just write directly trace receivables, cash and cash equivalents. Inventories, no adjustment, simple addition. Investment will not come. 1230 730 1180. Trade receivables. This one 1415 270 620. One four one five 270 620. And there's one more thing in with respect to this asset adjustment. There is some bills payable. Say bills payable MX Limited 55, which is receivable, bill receivable. Oh, bill receivable is also there. That also I should take. Sorry, plus 650 plus 60. Everything I'll report together. So plus 650 plus 60. And this bill payable, mutual owings, will be reduced in bill receivable and in bills payable. So minus 55. So 1415 270 620 650 60 55. I think 2960. Cash and cash equivalent, simple addition, no adjustments. 1085 90 150. 1325. So total. 11,925. So equity and liabilities. First, equity, we have three things: share capital, other equity, and NCI. Okay. So share capital, only holding company share capital. Holding company share capital 3,400. Other equity. As per our working notes, 2380 should come. But you see, this 512.5 happened to be positive number. If negative number, we'll take it as goodwill. Positive means gain on bargain purchase or capital reserve, you can say. So other equity will be sum of these two. 238.6, 2380.6 plus 512.5. 2380.6 plus 512.5. 2893. NCI, as per working notes, 1216.9. 2380.6. 0.6 actually, okay. So you get 283.1. 2893.1. Okay, so non-current liabilities. Do we have anything? Nothing. Non-current liabilities, we have only trade payable, bills payable. Okay. So current liabilities. We have trade payable only. We can say financial liability as well. 2920 690 805. 2920 690 805. 4415. Okay, so you can do the total and see if the balance sheet is tallied. 3,400, 2893.1, 1216.9, 4415, 11,925. Okay, so that is what is with respect to chain holdings. Okay, so any doubt on this one? Shall we go further? Okay, so very good. So this is what the exam problem in our format. So answer we got in less than around 35 minutes with explanation. So at least in 30 minutes in exam, you should be able to do it comfortably. Okay, let's go further.